markets obviously panicked on Friday because we haven't seen this kind of trade threat for a while. And now that is coming back. But also the thing is we have seen this movie before. It's kind of a deja vu. And I think we are likely to see de-escalation. And indeed, President Trump has treated that potential. So I think it is pretty much still a market that wants to buy that dip. And that's why we're seeing futures rebounding. But having said that, we do have to acknowledge that the trade tensions are still there. It's not going away. It is likely to de-escalate. And there's still going to be some risk premium in the markets that we have to price in going forward.
I was looking at Paul Donovan's note, Paul Donovan of UBS this morning, and he had a point about the way that this has all unfolded over the course of the weekend. He said the risk from this episode is less the tariffs and more the unpredictability of policy. And he added the positive from this episode is that the administration does seem responsive to market moves. I wonder if you agree with that as you've watched all of this unfold. Yes, the tweet that we got, the post that we got on Truth Social on Friday, the seismic effect that had as markets closed, and then the way that it was walked back over the course of the weekend. What's the lesson learned for you as an investor from the way that played out?
Yeah, I think some of the lesson learned is that there is certainly room for negotiation. The fact that the tariff that is supposed to go into effect is November the 1st. There's clearly time to make a deal or to extend further this deadline. So I think that is quite clear given the date. And also this time around, the target is just China. So it is very different from where we were in April when it was US against the rest of the world. So again, that is, it is still severe, but it's arguably less of a severe situation compared to back then. And of course, I think the market still has that muscle memory of Trump always chickens out. And as we stand, it is, we're moving towards that direction. I think President Trump certainly don't want to see the market going down.
Janet, before the last several days of trade tension or escalated trade tensions, probably one of the key issues for this marketplace was AI and potentially a bubble, if you will, of AI optimism, given all the deals we saw over the last couple of weeks between some of these tech companies. How do you view that part of the market?
Well, I do think that in the near term, there is some froth, and we have to acknowledge the strength of that rally, right? Some of those AI-related stocks just doubled since the April trough. So it is fair enough that people are looking for reasons for some sort of consolidation and then buying the dip, because I think certainly some investors want more exposure, because that's still a very strong long-term theme that we have visibility on the demand. I mean, if you look at anywhere in the market in the world right now, you really can't find an area that there's so much certainty, at least in the near-term demand, at least going to the 2030 in terms of the infrastructure build out. But we do think that some of the transactions recently involving some of the AI companies are getting a bit more circular in nature. Some of that is vendor financing. So I don't think it's a huge risk at the moment, but it's certainly risk monitoring, because it makes pricing the underlying demand a little bit more complex.